All done. All silent. Going. Gone. So congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
Hello and welcome to another edition of Current Market Insights. I'm your host, Ciaran O'Brien, and with me, as always, is my co-host, Mr. Peter O'Malley. Peter, hello.
Good evening, Ciaran. Great to see you.
Yeah, great to see you, Peter. It's been a couple of weeks between episodes. As you know, Peter, I've been out a little bit unwell for the last few weeks, so it's nice to get back into the studio.
Yeah, indeed. Look, sorry to hear that's taken place for you, Ciaran. Do you mind telling the audience what happened? I think it's a lesson for all.
Yeah, look, I was away doing a fun run actually, and got a bit of a scratch on my arm that quite quickly turned into a septic infection, which had me in the hospital for quite a while, and receiving antibiotics and all the treatment that comes with that. And it's only been a couple of weeks, but I tell you what, it was a pretty harrowing few days, that's for sure.
Yeah, and last time we spoke, we haven't seen you since you got out of hospital. You were transferred from one hospital to Westmead. How long were you there for?
I was in Westmead for 4 or 5 days, I think. Honestly, it all just kind of blended into one. But I will say, haven't been in the hospital there before, but a really great experience, great team, really great facilities, and certainly, shout out to any of them if they are listening. I really appreciated their help.
So an innocuous scratch on the arm ended up being a week in hospital, and obviously you're still a long way from A1 at the moment. Yeah,
it's almost 2 weeks altogether, but such an innocuous scratch, I didn't even notice it. So small, I just thought it was a patch of dry skin on my elbow, and within 48 hours, I was shaking in my bed and trying to get the hospital to admit me so I could get some treatment.
Absolutely frightening.
Oh, look, first time it's ever happened to me, and certainly a bit of a wake-up call, that's for sure.
Yep, great to have you back on board.
Yeah, great to be back, even if I am a little bit under the weather, and I certainly apologise to our listeners if my conversation rambles, because my head's still not quite in it. But I wanted to have a chat today, Peter. There's been a little bit happened since we last spoke, and I think probably the most important event in terms of what we like to talk about would have to be the ongoings with NetStrata. And some of the information that's coming out about their practices in business. So I thought we might just start off, if you could give our listeners a bit of a recap of what's kind of happened in that space and what are the implications for people that may be in buildings that are managed by this company.
Yeah, so the ABC have done an in-depth investigation into NetStrata because I guess they were tipped off by an insider or something similar. And what they've discovered is that in contravention of the legislation, NetStrata are accused, we must say, at this stage, but they are accused, or it's alleged, that they had a wholly owned insurance subsidiary that they were sending all of their strata insurance work to, and it wasn't disclosed to the people who were paying it. Furthermore, the ABC report alleges that they were receiving commissions or rebates or kickbacks from tradies that they had works done on their building. Now, the reason that's problematic is that the Owners Corp, when they employ a strata manager, do so on the basis that you're employed on our behalf to go and source the best tradespeople. So when they take a kickback, a rebate, or any sort of incentive from those tradespeople, what's actually happening is that the strata management firm are being paid twice. Once by the owners committee to manage the building and once by the tradespeople as a thank you for getting the work. So that's completely unacceptable because you can't have two masters on opposite sides of the fence because you're clearly conflicted. So that's a pretty serious accusation against them as well. This is interesting because you may remember at the beginning of the year in our real estate report in January and then a subsequent podcast that we did on it, we mentioned that insurance premiums are going up 20% year on year at the moment, primarily because a lot of insurers are dropping out of the space. So it is getting harder to get strata insurance as it is. And this issue won't give owners, corporations and title holders in strata title buildings any sense of comfort, that's for sure. Interestingly, unsolicited, one of my clients stopped me down Darling Street during the week and wanted to have an in-depth chat about what's going on with the strata in the building that he's in. And basically, because strata has gone up 20% year on year, but there's no more work being done by the strata manager, he pointed out to the strata manager that the costs for finding insurance has now become exponential, buried in the costs, and that should be tweaked in terms of the commission rate that the strata manager takes for sourcing an insurance player, and the strata manager had no intention of reducing that rate. So there's now actually, you could call it a conflict of interest of sorts, where the strata manager benefits from more expensive strata insurance premiums, which is alarming. And clearly, if we keep going down this path, as the ABC report suggests, the government will have to intervene, and intervene quickly, because this is going somewhere very nasty very quickly, and it's been a segment of the real estate industry that's been overlooked for a very long time. But now, with the state government having such a propensity for strata living in the inner city, these issues have to be cleaned up very quickly.
So you've raised a whole bunch of things there, I think, that we can sort of unpack a little bit. So we've got a strata agency who allegedly are using a kickback system or a brokerage model to get buildings to insure with a company that they own without disclosing that information. Would it be fair to say that if NetStrata had been, open and transparent with their buildings in the first place about this being a subsidiary of their company, that we really wouldn't be talking about it now, regardless of the fees charged on top?
I think that sets up an evident conflict of interest why it's not disclosed. For an owner's corporation to go and employ a strata manager, and the strata manager says, yeah, we've gone to the market, and you wouldn't believe it. It just so happens that the best insurance firm for your building is the insurance firm that we own. It's a wholly owned subsidiary. It must be pointed out that the ABC report alleges that the insurance that insurance firm were charging was 3 times the accepted rate or the market rate. I can't confirm that or otherwise, but that's what's alleged in the report. So if that is found to be true, that's a massive issue.
So I think I had a quick read of the report earlier. I think it said that the brokerage fee charged by NetStrata was 3 times the standard. So the actual insurance amount may have been the same or comparable to another supplier, but the actual fee that they got for brokering that insurance deal was something like 3 or 4 times higher than what should have been charged. And that's how they were, obtaining quite a lot of this money. I wonder,
they're 3 times better off. So I didn't read the article. I watched the news report on it tonight.
It does say, interestingly, this is one of the few articles I've ever seen actually that says there's information in this article that's unique to the web version only.
Okay.
There's quite an interesting take there. But I wonder, someone who lives in a strata building and who was on the strata committee for my building, does some responsibility not rest with these owners and those on the committees to request multiple quotes for things like insurance? I know we did when we went to renew, and all of them were horrible. As we've talked about, strata insurance costs are going up. But does there, not to absolve NetStrata of any of these accusations, but is there not some responsibility that should fall back on the owners here to have asked for more?
Should always be, but when someone is flouting legislation, if it's easy to say in hindsight in all facets of life, legislation was being flaunted here and we should have been more vigilant. But at the end of the day, the rules are in place so that you can operate with some certainty, and you've got a framework to fall back on when people are operating outside the accepted norms or operating outside the legislation. So the people in question are clearly on the hook now as this investigation takes place. I believe an independent auditor has been assigned to go through everything and prove or disprove the claims. Even if the claims are disproved and NetStrata are proven to be operating within the legislation, I think this is a big wake-up call. We saw it early in the year, as I say, Ciaran, we were hearing ad nauseum from strata title owners and from managing owners committees that they just couldn't get the strata insurance that they were looking for. So it's unsurprising that we've sprung a major leak like this issue here.
I think it's a really good thing for the industry. I will say my dealings with this company, they have form in this space. I know when trying to get some strata reports done for clients in the past, one of the common bits of feedback I get from the inspectors is when you're dealing with NetStrata, they charge a fee that's above the legislated amount. And even the inspectors say, we wish you didn't have to pay this fee, and we've been fighting it for quite a long time. But these guys appear to have form on just trying to push the envelope as much as they can.
Yeah, well, a strata manager is tasked with a lot of responsibility. They're effectively managing funds in trust on behalf of consumers, and it just seems like the money flow that was going past them was too tempting. I know that the rank and file property managers are faced with the same temptations where an owner pays them to manage their property, but the relationship that the property managers have with the tradespeople always needs to be above board. You can't be property managers hand out a lot of work, Ciaran, to plumbers, electricians, roofers, etc., all sorts of tradespeople, and their actions and the way they divvy that work out and get the quotes needs to be on reproach. So it's anywhere where there's an area of conflict of interest, it'll be too tempting for someone at some point in time. And the only surprising thing about where we are now is strata is that it hasn't come up earlier.
Yeah, I must admit I'm a bit surprised, and this is a bit cynical of me, but I'm not surprised that the director of this company is also the president of the association that manages strata corporations, and I feel like these people position themselves to ensure that they're always at the forefront of knowledge, so they can push the envelope a little bit further.
So he has stepped down now, hasn't he?
I think so, yeah.
Yeah, pending.
In light of this.
Pending this investigation and the look that it casts, yeah.
That's it. It certainly doesn't look too good for them, but I can only hope, I don't know about you, but I'm a big fan of cleaning up the industry. We talk on the podcast quite a lot about just real estate needing enforcement in certain areas, and I think this is another one that will be very good for clients in the long run when this all comes out in the wash.
It will be painful in the short term, though.
Certainly will. Moving on, Peter, I really want to jump on to a slightly different topic now. One that you and I have actually talked about a lot on the podcast, which is the cashed up international buyers coming into Sydney. But I read that there's a bit of an article being put out trying to quantify some of the impact that's had on the market. I thought we might get a sense of what that looks like.
Yeah, look, some great data. So, quote unquote, the latest Treasury statistics from the Register of Foreign Ownership of Residential Real Estate confirmed 1,955 homes were bought by Chinese investors with an estimated $2.5 billion in value. The data revealed Hong Kong investors purchased more than 400 homes with an estimated residential real estate value of $300 million. So Hong Kong is effectively is a part of China, so I'm not sure why they've itemised those out. So you're actually talking 2,355 homes there have been purchased by Chinese investors in just 9 months in Australia.
Is it just on that? Are they breaking them out because Hong Kong has a lot of expats, perhaps, to indicate that it could just be Australian foreign purchasing? Does that make sense?
No, it clearly says Chinese investors and Hong Kong investors, Ciaran. Yeah. One of the points that we touched on when we did speak about overseas investors in the past was Vietnamese buying in Australia is up. So they've been credited with securing 259 properties in 9 months in Australia at a total value of $300 million. And how we got onto this overseas buying thing was the cheap currency. We think here, and we quite rightly think here in Sydney and Australia, that our real estate's fairly expensive when you're earning the Australian dollar. But when you're running on some of these currencies, the Singaporean dollar earning US dollar, the Great British Pound, etc., those currencies are performing really, really well against the Australian dollar. And when those people land here or come here to buy real estate, they're finding it quite affordable.
Yeah, look, it certainly makes sense. I mean, if you're earning the USD, you effectively get 30% for free. And if you're on the pound, I mean, you get even more. So it's not surprising that a lot of foreign money is coming here. It is, we always talk about how Sydney property in particular is a safe haven for investment because it's always trending in the upward direction.
Yeah, look, London has been the recipient of this sort of hot money on and off over the decades, and I don't think since probably the 80s that Australia has seen it outside of Chinese investors to the degree that we're now seeing it. But yes, if you follow high-end London real estate, you've got Russian money pouring through it. Real estate agents have got really high obligations to report suspect money that might be flowing through the real estate market there. But money from all over Europe flows through high-end London real estate market. I know that for a fact from many agents that I've spoken to that do business there. And clearly it's not all clean money. There was actually a BBC program, a fascinating watch, where they had Russian individuals impersonate themselves as wealthy Russians trying to park dodgy money. And they went around and looked at all of these properties with real estate agents, and the poor old real estate agents didn't know they were being recorded. And basically, this impersonator was incriminating the agents, saying, "I've got some dirty money I need to park quickly." And some agents didn't want anything to do with it, but clearly some fell for the easy money and were like, "I'll help you hide the money. I won't say anything." And it was all on camera as part of a BBC investigation. So, Australia's been a bit naive about how certain things work in international markets, and this data really proves to us factually now as to how much money is coming into the country, where we were previously reporting on it anecdotally. So it was a great article and great numbers to see.
Yeah, certainly. This is purely anecdotal, but I have always said that anyone working in real estate should first have a job in retail, because you just assume everyone's a mystery shopper, and that's the best way to operate. If you think someone is testing you, then you'll always do the right thing. I as we sort of close up this topic, I did have a bit of a look at some of the data from 21-22, which was obviously quite a big year in terms of prices in Sydney. And the Investment Review Board reported less than $3 billion in foreign purchasing in that year. So to me, it's really quite interesting that we're seeing, I think, if you add it all up, we're seeing more than $5 billion come in a 9-month period, compared with less than 3 in what was a boom year.
That's right. So
amazing.
You call that $7 billion in rough numbers. If my maths is correct.
Closer to 8.
Yeah. Annualised, that's pretty epic, isn't it?
Oh, it's massive. Yeah, massive. I mean, that's effectively 2.5 times what we saw during the boom, and that just shows that either currency is tanking here relative, and there is a big uptick, or people, it's continuing uncertainty, cost of living crisis all over the world. Maybe people are just looking for a safer.
The government whilst we've got really high immigration, as we know, the government have chased a different type of immigrant in recent times, and they've gone for skilled labour. More millionaires came to Australia in 2023, Ciaran, than any other country.
Yeah.
So it was a destination for the wealthy last year. It would have been also subtly enhanced by the fact that New Zealand finally put some policy in place that really blocked international money flow, because New Zealand was experiencing exactly the same thing, but being a much smaller market than Australia, that was further manipulated. It's worth pointing out that the New Zealand real estate market, for the first time in quite some time, is on its knees at the moment, as foreign demand has evaporated and they're now merely operating on the domestic level. So if we do want to block this international money as a country, that's fine, but we do also need to acknowledge the role it plays in pushing prices up. If we look at the rest of the list as to where these foreign investors came from, 272 homes went to Taiwanese, totaling 300 million. 354 went to Indians, totaling 200 million. 174 properties totaling 100 million went to Singaporeans. The Nepalese absorbed 250 dwellings totaling 300 million. UK, which obviously used to be the number one country that people would come to Australia from, was 170 homes totaling 200 million, and Malaysia was 93 homes totaling 100 million. The majority of those people would be chasing higher end real estate, I suspect too. The buyer's agent Simon Cohen said in this article that I read, international investors are not impacting the lower end of the market. Australia is a popular destination for international investors, but these overseas buyers are not impacting the market in the lower end of the market, in his opinion, which I tend to agree with.
I find that, and again, maybe I'm a little bit cynical, but I find that interesting from him, given that if you look at the numbers from just a raw data perspective, of all those countries you listed, there was only 3 or 4 that appeared to have if you average it out, an average purchase price over $1 million. So that, I don't know to you, but to me that says that there's a lot of countries, particularly China, I think was a big one, where they're buying with an average cost of less than $1 million, which tells me that maybe they're just buying investment apartments or whatever. Whereas I think Vietnam had the highest, from what you mentioned, where they were, by the sounds of it, about $1.1 million as an average purchase price. So does that, I guess, in some ways kind of tie into what you're saying about the skilled occupation list, where, we're getting experts from some of these countries that are buying in average homes in Sydney, and then you've got other countries that are just purely investing?
What I would say, and unless we had the data in front of us, we'd never really know, Ciaran. But what I would say is the top end of the market is nowhere near as heavily traded as the mainstream market. So it doesn't take much for the top end sales to be distorted, if that makes sense.
Yeah, of course.
If in Balmain, for example, in the last 12 months, not Balmain, postcode 2041. In postcode 2041, you might have seen 4 or 5 properties sell over $10 million in the last 12 months. So if you get 3 or 4 international buyers that arrive in town and quickly gobble up a number of the listings or trade off market at the high end, they're going to quickly distort the numbers as to what's going on with the market overall.
Yeah, of course. And I certainly, we can't fully analyse the data because we don't have it all. But to me, it's just an interesting sort of trend that it seems to be.
The article goes on to say, Mr. Cohen's associate at Cohen Handler, Isabel Lucas, said there was currently a big influx of international buyers attracted to the Bellevue Hill market. Well, a big influx of buyers in Bellevue Hill might be five Chinese or Hong Kong buyers that arrive and want to do business. That's a big influx for them. Whereas you throw 5 buyers into the Des Moines apartment market and you'll barely notice a ripple.
Yeah, of course. Really good recap there, Peter. I think it's we've been talking about it for a long time now, and it's good to see that there is some concrete data to back up what we've talked about. As we move towards a close tonight, Peter, I thought we might do a bit of a market wrap. It's become my favourite part of the podcast, to be honest. I like tracking the trend line and getting a sense of where we're going in property. And I always love it as a measure of trying to predict where we're going to be in a week or two's time. Yeah,
well, look, SQM Research's numbers showed that listings dropped during April, and that has continued through May. And we knew that April was a tricky month for all of the reasons that we've discussed in the past. So tight stock levels, I think, have helped the market to hold up, Ciaran. So last Saturday, for example, on SQM Research's numbers, there was 806 auctions scheduled. Now, that's after a couple of weeks prior to that where the auction numbers were around the 1,100 and the clearance rate sort of fell back to 50%. But on those relatively tighter auction numbers, the auction clearance rate jumped to 55% last Saturday. Of the sales that were recorded, 215 sold prior to the auction, 25 sold after the auction on the Sunday or the Monday, and 226 sold under the hammer. So there's some improving clearance rates. I am noticing, not across the board, not universally, but there is a number of properties that are repriced downwards to attract more interest. Some of those sale prices bounce back up. when competitive bidding gets going, and some don't. So essentially, the market's pretty wild at the moment. It's not easy getting a clean read on it because every sale seems to conflict with what happened with the last.
Yeah, it's really interesting. Just tracking back a few months, we were talking about 1,600 properties going under the hammer, and now we're talking about half of that. And you actually predicted, I'm sure, last time we spoke, that if the stock came back slightly, that we might see a bump in clearance rates again. So I'm glad that has come true. Given I've been off for a couple of weeks, just very quickly then, have you got any sense on what's happening in the rental space at the moment?
Oh, look, only that it's undertaking its typical seasonal downturn. So landlords who are negotiating lease renewals or they're on the market need to be really careful that they're not caught up in the hype of the time about the rental market. Yes, the rental market is in a systemically long-term upward trend. But even in systemic upward trends, there are periods where the market will either consolidate or dip before it goes again. And that tends to happen with the rental market in winter as people are less inclined to make a unforced change at that time of year, and certainly have a higher desire to make a change in the warmer months when it ties in with the new calendar year. So we've been leasing our properties steadily. We're not seeing massive growth on the year-on-year rents that those properties are achieving, and we're definitely not seeing massive crowds turn up to open houses. It's more steady demand. Make no mistake, next January, next February, all the crowds will be there, and that's when the media can go out and get their stock footage to talk about the wild nature of the Sydney property market, but that's not quite how it's playing here and now in May 2024.
Yeah, it makes sense, Peter. Really good chat tonight, and a really, I'm glad to be back in the seat and having a bit of a discussion with you.
Yeah, great to have you back, Ciaran, and good luck with the rest of your recovery.
Yeah, thank you, Peter, and thanks to everyone for listening to Current Market Insights. We look forward to talking with you next time.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate, the podcast providing real estate insights you won't find anywhere else.